I'm going to explain one of the most commonly used debt solution in UK, an IVA. We call it individual voluntary arrangement. If you are struggling with unsecured debts and feel like repayments are becoming unmanageable, an IVA may be one of the options or suitable debt options available to you. An IVA is a formally, legally binding debt solutions between you and your creditors to repay part of your debt over a fixed period of time, which lasts normally 5 to 6 years, through an affordable and sustainable monthly repayment. So it is arranged through an insolvency practitioner, a licensed insolvency practitioner, and once this is approved, it becomes legally binding on all your included creditors. In simple terms, an IVA helps you to combine all your debts into one monthly payment. It reduces your financial pressure. In many cases, return off of a portion of your debt is possible at the end of the IVA term. What type of debt can be included? So let's discuss that also. So a credit card or credit cards, personal loans, overdrafts, catalog debt, certain HMRC personal tax debts like your self-assessment of previous years or accumulated HMRC self-assessment debt can also be included in your IVA. It does not normally include your hire purchase agreement, secured debts like your mortgage or your secured second charge loan. It cannot be included under an IVA. How does an IVA process work? I'll go through step-by-step process. The step number 1 is initial review. The first step is that a full financial assessment, a debt advisor or insolvency practitioner will look into your total debt liabilities, your income, probably your PAY income or your self-assessment income, your essential living expenses. This helps determine if an IVA is suitable for your situation. Also, it is essential to see how much assets you have, whether you own any property. So there are a lot of factors which need to be determined when you are going for an IVA solution. Step number 2 is the proposal is created. If an IVA is a suitable and appropriate solution for your needs, a formal proposal is then created. The proposal includes how much you can afford to pay each month, how long the IVA will last, usually 5 or 6 years, as I said, how much creditors are expected to receive. Now, in order to approve or get approval on your IVA, it is important the proposal is then sent to your creditors by your insolvency practitioner. For the approval of an IVA, at least 75% of your creditors by debt volume must agree to an IVA, otherwise your IVA will fail. Step number 4, monthly payment begin. You can make fixed monthly payment to your insolvency practitioner each month. It is their duty that they distribute this monthly payment to your creditors each month. During this time, interest and charges on your credit cards or all your unsecured debts are frozen. Collection calls usually stop. Legal action is absolutely paused or prevented. Now, step number 5 is completion of an IVA. Once all payments are completed, so say for example, you have contributed out of say £50,000 of your total debt liability, you have contributed £30,000. And if there are no other means to pay, at the end of your term, your remaining debt may be written off. You can become debt-free from those included debts as well. So, what is the impact on your credit score? That's a very important section. It is important to understand that IVA is a formal debt solution and a legally binding debt solution, which means that your name normally goes on a bankruptcy register. So anyone who has opted for an IVA must choose IVA very carefully with looking into all your personal circumstances. Certain jobs, say for example, if you're an accountant, if you're a financial advisor, if you're a doctor, if you're a nurse, or if you're into police, you'll have to see whether IVA or opting for an IVA is still considerable while you are working. So certain jobs you are not allowed to work when you are on an IVA. Final summary in IVA is that IVA is a formal debt solution designed to help individuals who are struggling with unsecured debt. It is a more legally binding formal debt solutions, a structured repayment plan. It gives protection from your creditors, and possibly there is chances that portion of your debt may be written off at the end of the term of your IVA, because IVA must end from 5 to 6 years of the term, and that's the beauty of IVA as well.